So first and foremost, it's not a science, it's actually more of an art. And that's kind of one of the first things that I learned in this business is that finance, the one thing that my father told me really early in life, he said, don't do anything that you can be replaced by a machine. And one of the great things about this business is it's very relationship based, and I want to sort of touch on some of those points. And obviously I'm going to, give a little bit of a pitch for PI Financial and why you should use a broker. So I want to cover off sort of two main points today. And unfortunately, I don't have any fancy slides. And there's twofold reason for that. I've been on the road for the last 5 days marketing a brand new deal that we just took public. And second of all, I couldn't figure out how to make them. So anyway, that's part of my...
Bryan, you talk loud, so just step back.
Yeah, okay, the non-scientific approach. So firstly, I'd like to thank the CSE for giving me the opportunity to speak with everybody today. For those of you that don't know who I am, my name's Bryan Henry. I'm a senior investment advisor at PI Financial. I've been in the industry probably since about 1994. I delivered the mail at Canaccord. It's given me just about everything I have today. I've been a registered IA for about 15 years. I've taken several companies public, and I've been through the process probably at least a dozen times. And I think at this sort of stage of the game, I'd like to just let you know that I'm probably one of the most passionate proponents of the entire process from start to finish, whether you use a broker or not. I think it's a really great time in Canadian markets to go public. There's multi-year liquidity out there. You've got financings. I've seen more financing done this year than I've probably seen almost in the last 5 years combined. And we've got a lot of happy clients. And it's being led, the charge is really being led by retail. It's not an institutional market right now. Most of the institutions I've talked to have missed it. And so it's a great time to be a retail investor. I think it's the first time probably in 5 or 6 years I've been able to say that. So the first question to ask yourself when deciding to go public, and I'm sure you've covered most of this off today, is do you need to raise capital? And then the next question is how much capital do you need to raise? And then the next major consideration when going public is, do I want to involve a brokerage firm in the process? In many cases in this era, brokerage firm involvement is not necessary. To go public on the CSE, a brokerage firm sponsorship is actually not a requirement. And depending on the transaction and size of the financing, sponsorship may or may not be required on the TSX Venture Exchange as well. So my bias coming from the brokerage world is even if you do not require formal sponsorship arrangement, is that you identify and engage with, at the very minimum, a lead broker to help you lead and assist the financing process and that whole go public transaction. And we'll talk about that a little bit later. So let's have a look at what it looks like to go public by way of PI. Now, you have to remember, I'm a broker, I'm not a banker. I don't work in corporate finance, but I work very closely with them. So I'm speaking sort of from what I've seen on the other side of it. And I think first and foremost, if your chosen route to go public, and I can only speak from PI's perspective, is to use PI, you'll generally sit down with one of our corporate finance representatives, and depending on what your particular business does or what sector you're in, you'll meet with a different banker. So we've got a specialty banker that works on technology and special situations, and we've got a different set of bankers that sort of do the more mining and resource-based deals. And then this is basically how it looks, and I think this is probably the fun part, is once you sit down with that banker, in my experience, this is generally what they're going to look for. So first and foremost, does that banker like your deal? And this is hugely important. I mean, if you don't sense that level of passion for your project, like if it's just another line item on a balance sheet or another fee for these guys, my suggestion is walk out of the room immediately. That's probably the most important thing. The second thing I'd look for, or the second thing that these bankers are going to look for is, are there any fundamental issues with the project or the company that cannot be fixed within a reasonable amount of time? And examples of some of these fundamental things that cannot be fixed would be fundamental problems with a business plan or fundamental problems with a management team. And some of the things that are a little bit more easily fixed in a short amount of time can be the capital structure. And capital structures, as you'll see in a little bit here, it's very important. The next thing that a banker often looks for, and it's, will this financing sell? Under that sort of banner, there's two things. What's the correct valuation to sell the financing at? And how do you sell it? Bankers generally like to compile a quick, short list of how they'll sell a deal, and if they usually can't get it down to like 3 to 5 quick points, they'll sort of often struggle. Like if they're finding they're struggling themselves to find those sort of 5 key points to settle a deal, quite often they're not going to want to look at the deal. Number 4, how much are we raising? Is there enough to satisfy the business plan for up to 24 months? I use 24 months as a benchmark. It's not it's sort of something that I pull out of the air, and I think we just talked about it. The worst thing you can do is raise too little capital, go public, and need to raise capital within, say 6 months or 3 months because you're out of money. If you need to raise capital for another reason, or you've been offered capital, that's a whole different ballgame. But if you need to go back to market within a short period of time, you're often, your equity's going to struggle. You're doing what I call down rounds, and it leads to what looks like a J curve. You end up going public. Say your last raise was at 25 cents. Your stock ends up sort of trading up to maybe 30, 35, and then it tends to as people find out that you may need to raise capital, you'll find that your stock price kind of sinks below the last financing price, and then it ends up looking like a J. And if you can get back out of that J, you're lucky. But my preference is always, and I can't stress it enough, is raise more capital than you probably think you need. Next thing is, most bankers and me and myself will look for a clear and concise use of proceeds. Worst thing you can do is just say, well, we need $2 million. And you say, why? Well, we need it for the growth in the business. We need it for a marketing strategy. We need it for a drill program. And I think the best way to handle any banker is to walk in with a very clear and concise use of proceeds. Break it right down to the dollar. $50,000 for this, $100,000 for that, and show how long that money lasts. And I think you'll have a much better sort of understanding of what each side wants and what needs. And then number 5, when selling the deal, a banker's always going to look at what the objections are going to be. So when they go out and they sell it to their institutions or their clients, they're always going to sit back and say, okay, in that room, what are the objections going to be? So they're going to try and look to close as many of those objections as possible long before they go out and market a deal. And it just makes it so much easier to sell. One of the big questions at the brokerage firm always is, what are the fees? At the corporate finance level, if you do choose to go with a broker deal or a corporate finance-led deal, the basic rule at PI, whether you call it sponsorship or engagement, it's about $50,000 Canadian. I know Blake's not going to like this, but it is negotiable depending on the size of the transaction. And you can negotiate whether or not you want to pay that all out in cash. You can negotiate based on agent. There could be a combination of cash or agent's warrants or cash or equity to go along with it. And it kind of comes down to the size and complexity of the transaction. And then the next set of fees, there's always going to be fees associated with actually raising the capital. And that's what's actually get paid to the brokers like myself who go out and speak to their clients and raise the capital. Standard in the industry right now is about 7% cash, 7% agent warrants. That's usually the mark that I sort of start with. Sometimes it's higher, sometimes it's lower, depending on the transaction. Basic math on that, if you raise $1 million, there's going to be at 7% a $70,000 cash fee payable to whomever has raised that capital. And then, so you've decided to now go ahead and engage. The banker's excited, you're excited, you're going to go ahead and raise the capital by way of a broker deal at PI. What happens once you sign an engagement letter? So once that engagement letter is signed, banker embarks on a detailed due diligence process. It'll involve a detailed review of the business plan, financials, capital structure, and most likely a site visit, especially depending on what you're doing, but especially if it's an operating business, they'll generally want to go and visit the business. The process can take, I find, as little as a week to a matter of weeks, even months, depending on how prepared the company is. The purpose of that whole DD process, just so you know, is not just to collect fees, but it's actually to protect shareholders' interest and the investors' interest once the financing is sold to the clients. And so then back to the sort of lead broker aspect of it. When engaging with a banker at a firm, whether it's PI or any other firm, I strongly suggest that you have a lead broker in mind at that firm to work with. The lead broker, and it's just a little bit of a sales pitch for myself, is I think an important component to the small cap public markets in Canada today. They're really your foot soldiers, your boots on the ground. They're your ones that are going to be championing you not only within the firm, but they'll be championing hopefully for years to come with their clients. They'll hopefully retain a position on their book. They may lead your next financing. They might be your lead order. I find a lot of times with bankers, and that's taken away from them, but it tends to be a little bit, especially when they're busy, they don't pay as close attention to the issuer once the financing is done and completed. And that's kind of where your lead broker should hopefully take over that role and at least act as a liaison between the brokerage firm and the banker and all the shareholders. So, and then I was asked to sort of think about some of the things that I consider when I'm looking at projects. And again, I think I've taken public over a dozen companies. Some of them have been bought out. Others, I think the highest market capitalized company I've ever taken public, we started with about a $400,000 valuation, and it went to 850 million. It's now listed on the TSX, and it's got about 102 million in cash. So I've had various different experiences, some successful, some not so. And really in the beginning, I never expect to see a fancy investor presentation. I think too many people get bogged down in the whole idea of having this really fancy, flashy looking investor presentation. I actually don't really care too much about that in the beginning because we can always sort of work on that as we go along. And I actually think investor presentations are a bit of a fine art and definitely should be, there should be time well spent on it and refining. You should be working with your banker and your broker on your investor presentation. What's far more important to me is that you have a clear understanding of your business and you can articulate that to myself. And it doesn't necessarily mean that you need a detailed business plan. It's always good and helpful to have one. I like seeing a business plan, especially if it's an operating business. Business plan tells me is that somebody's organized, number one, and number two, that they've put a lot of thought and sort of planning into the business. Those are the type of people that we like to work with. The next thing I always look for is an organized capitalization table. It's not a killer, but when I ask for a cap table, if somebody, I've been through this experience before several times where either the person doesn't know the cap table, it's something that you should basically have down in your sleep if you're an owner operator of a business, or at least lead manager. I kind of like to think of it, it's like the inner skeletal workings of a company. If you were to x-ray it, how many breaks and fractures are we going to find in behind there that we're going to have to fix? And I think the golden rule is the cleaner the cap table, is sort of the easier the transaction. And then the hard part I find often with people who have a private company that they're wanting to take public is what should the valuation be? And it's a bit of that's where the art comes in, not the science. I mean, you can take your cap table and say, we've got 10 million shares out. We did the last raise at $1. It's a $10 million valuation, but that isn't always what fits the go public transaction. And I encourage anybody that's going public is to be flexible on that valuation. There's ways to bump up the valuation by way of performance down the road if certain milestones are met. But I find if early in those conversations, if you're really getting hung up on valuation, you're probably not going to go anywhere with that relationship. Important for me too, again, just have a clear and concise use of proceeds. And above all, be excited. Like, have fun with the process because it's awesome when it works, but it sucks when it doesn't. And I think in theory, this whole process of going public, if it works well, should lead you to continually raising capital at higher valuations once you're out and you're public and things are going well in marketing, but it doesn't always happen that way. So you have to remember that your relationship with these people that take you public, especially your lead broker and your banker, they're important relationships. You're going to be married to each other potentially for as many as 2 to 3 to 4 to 5 years. As they sort of walk you through other financings, as they hold your shares, they hold shares on behalf of their clients. So choose your partners wisely. I suggest if you're butting heads again early on in that relationship, it's probably not the best relationship for you. And I always get asked about time, like how long is it going to take? And the realistic answer is no one really knows. The whole process, once it's through the due diligence phase and it enters the official engagement stage, is designed to take about 3 months. Very few transactions, even simple CPCs, have I ever seen take 3 months. There's always going to be sort of things you can't prepare for, speed bumps along the way, things you need to clean up. There's going to be market conditions that you have to account for. There's going to be lost lead orders or lost, key orders in your financing and all that stuff. And I encourage you to be patient with the people you're working with, be open with them, be clear about your expectations and vice versa, and I find that relationship will be a lot smoother. And just in closing, in my 15 years in the business, the last 5 was easily the toughest I've seen for taking small cap companies public and getting them financed. I think it was difficult on all of us. But right now, in this last year especially, it's the best time I've seen in 5 or 6 years. We've got multi-year highs on liquidity. I don't know, James probably has statistics for you on the CSC, but anybody paying attention to any of these marijuana plays on the CSC, it's nothing but staggering. And congratulations to anybody that's holding any of them. And it's, on the financing side of it, most of the financing I'm doing right now, oversubscribed. It's the first time I can say that. I kicked and scratched and fought for most of the financing closings that we got in the last sort of 3 to 5 years, depending on what the transaction was. And right now, it's the opposite. It's cutting back and it's pushing people away, and it's kind of a nice scenario to be in. So I encourage you, if you're thinking about it, to get involved. And Canada, as a place to take a company public, it's one of the few places in the world that still encourages and is excited about doing small capital raises. If you want to do a small capital raise in the States, most of the people won't even talk to you. And if you do, they sort of put you in the corner on the over-the-counter bulletin board exchange. You can't get sponsorship. You won't get any sort of brokers or bankers behind you. And here, you can walk into a place like PI, and you can meet with myself or Norm in the front row here, and you can discuss doing a capital raise as low as $500,000, as high as $5 million, maybe $10 million. And generally, I think you'll find, as long as your project fits sort of the timing and it fits that relationship, I think you'll find that everybody's excited and you'll have fun with it. So. And again, just in closing, there's not all transactions, go public transactions, are suited for full brokerage firm participation. If you do decide to happen to go this route, make sure that you choose your dance partner well. As for good or for bad, that relationship may endure for years to come. And there's an old saying I used to love to live by, and my girlfriend hates it when I say it, but bad movies don't get better. So. And my dad, I always love this one too, because I'm a broker, but I remember my dad, I never understood it until I was a broker, but my dad had this brick on his, on like the mantle, and it said, "The broker you are, the broker you get." What does that mean? I don't know, I think I just figured it out when I was sitting up there.